Welcome back. If you're new, welcome aboard. Welcome aboard. If you're new, welcome back. If you've been here before, thanks for joining me for today's Trader Bite. It is 8:02 a.m. from Chicago this morning on Wednesday, the 7th of December, 2022. It is Wednesday. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 2372. Just a quick look at what the market stance is. The markets in our pre-market summary sheet today, still we have this pre-FOMC blackout period right now, and we're not hearing from the Fed. The market's anticipating a lot of movement when that occurs next week, December 14th. Busy day. I'm doing, just as a side note, on December 14th, I'm doing a futures radio show, or we're having Andres, who's a very well-known FinTwit analyst, macro analyst. We have a secret guest, a mystery guest as well. And Anthony and I, that'll be next Wednesday at 12 p.m. Eastern. There will be a giveaway, just like there is every month. And then in the evening, Convergent Trading's having its annual fireside chat event. We've done this every year for the last 3-4 years. And we'll be talking markets. That'll be at around 7 p.m. Eastern on Wednesday. This is an event where we just get together and talk markets. We have several guests for that. Jared Tendler, Brian Shannon, the person who brought the anchored VWAP to everybody, and the Convergent Trading Mavens, and several others. So you'll see announcements for those. Again, very busy Wednesday, next Wednesday. The fireside chat should be about an hour and a half to 2 hours. It's pretty cool. Just come on and chit chat about trading. So what is the market posture this morning? What's the risk posture? The risk posture is mixed this morning. We're seeing multi-distribution profiles across the board. The S&P is down 10 points from yesterday's settlement. Really not that much movement in the overnight session. Relatively wider range than what we've seen over the last few sessions, actually. Key earnings, not much. We do have GameStop after the close today. GameStop being a Wall Street bets play. So we'll see how that plays out. The key news events, China reopening. We have several U.S. banks warning of a recession. I think they're looking at they're looking at Q2 of 2023. There's just nobody out there believing that it's going to be a soft landing, but we'll see. Also, the Democrats won an additional seat in the Senate by winning the Georgia seat. Herschel Walker lost. And so now the Democrats have 51 seats versus 49 for the Republicans. Not sure what implications that has on the markets, but that was a question mark. And then this morning, a key Apple supplier says that they expect iPhone orders to drop. On that, the S&P fell and recovered. In terms of news this morning, not too much. We did get the U.S. non-farm payroll productivity. Came in at 2.4%, much lower than the 3.1% expected. The non-farm productivity came in at 0.8%, a little bit higher than the 0.6%. The prior is negative 4.1%. And unit labor costs, which is the more important component, came in at 2.4%. The prior is 8.9%. The expectation is 3.1%, so a little bit cooler than what was expected. And then today we have ECB's Panetta, we have the BOC rate decision, crude oil inventories from the EIA, and several numbers that you can obviously look up. Looking at the S&P, We have a multi-distribution profile in the S&P this morning. 270,000 contracts have traded. That's relatively heavy on pretty decent range of 40 points, and the point of control shifting way down. Market having turned over. The point of control for the S&P currently in the overnight sessions 39.36, and holding steady. The mid is around 39.34. We have what is kind of a balancy multi-distribution profile this morning. So let's take a look at the charts, just dive right in there. Here's what we've got. I'm not going to run through this again in depth, as you have heard this story since last Thursday. It's the same spiel. You know, we pushed, we had what was a really strong breakout on the Powell news. The Powell news departed from 56 and a quarter. That becomes our SOC. Okay. And then the poor structure started at 70. And the idea is we poked 41 and then we're starting to move down in what is one-time framing down. And then yesterday we opened at the low end of the range, and the expectation was that 39.70 would be tagged. And if so, then we're looking for 56 and a quarter to close that scene of the crime price, the SOC from Jay Powell. And that puts us back in balance down here in the 39.55.60 area. We held this 39.50 area for quite a bit during the session, and then we started to kind of let go to the downside. We took out the weekly low. We took out the weekly low at 41 and the prior week's low at 41 and a quarter, something like that. So we ended the one-time framing up on the weekly as well. And so there's a lot that happened yesterday that that's worth noting. What didn't happen yesterday that's worth noting is that we didn't leave a ton in terms of poor structures. We do have one single print starting at 39.7650 down into 39.67. That's the only poor structure. We had a real quick selling on the open. Let's zoom into this for a bit. So we've accomplished what I had been discussing since last Thursday and Friday, that we're very likely to come and revisit balance down here. Let me change my pen. We'd come back and revisit balance down here, and that's where we are. And then we ended up finishing really settling at 39.45 inside of the weekly range. And this morning we've just been teetering in and out of the weekly range, and holding the lower distribution of yesterday's trading. We're down here this morning, so we're holding this point of control area down below. So we had a nice little pop on the close yesterday, but it didn't really make much of an impact. I feel like the poor structure that was here has been cleaned up. We did test the 4100, so we've kind of ticked off a lot of boxes in terms of the market and what it's likely to do. We do have some naked points of control left behind here. That's the only thing that remains open. Let's take a look at this composite chart. Now, I said that I would not integrate these profiles together until this structure gets closed, and now that structure is closed. So what we're going to do is we're going to merge this into the bigger profile to see what the big picture is. Here we are. We're going to merge all of these days back in. And now we see that 39.60, this 39.56, really 55 to 60 area is key. It's very likely to present opportunities for an initial short. This area is acting as a magnet in this region, very strong, and it's acting as resistance as well. So we're very likely on any push up, we're very likely to get at least an initial response at that in that 55 to 60 area. That becomes the box to watch out for. If you recall, it was 40.54 to 40.50 before, and now it's 39.55 to 60. What we're left with is this thin kind of range that brings us back down to 38.70 for the gap, and we're very likely to continue lower. I'm not seeing until the FOMC. Well, we'll see what PPI does this Friday, but until the FOMC, I'm just not seeing how the market is likely to find traction in this environment going into the FOMC. So, banking profits into the close of the year makes sense. The Santa Claus rally may have already happened. We may base and start to push up, but before we can judge whether or not we are likely to push up, we need to first take out the 55.60 and then turn up and start to push through the 4,006 and then regain 40.20, and now we open up the way for the next distribution to take hold, and then the one up above that. So right now we're in this big magnet area, this big kind of profile area. There's a lot of acceptance in this area, and I'm expecting that the market's likely to be trapped, and given the posture of where we are, I'm expecting any push higher to be refuted, at least at first, for a rotation down into this next accepted area down below. So 38.40, 38.70 to 38.40 are likely to be next. So that's the overall picture. Here's how this thing has played out. Nice little impulse, continuation, pullback, lower high, and then we've drafted down from there. So we've really not been able to hold that 4,100 again. So we crossed 100 some odd points of range on the way down, with yesterday extending down on what appeared to be a trend day as we had multiple distributions going down. This morning we have pretty good range, so expecting pretty good activity. Again, we're opening in the imbalance. Yesterday I talked about this, that we are opening in balance and expecting chop, and what we did is we opened right under the 4,000, 39.99.75, and then we pushed to 4,005 and to 4,005, and then fell off with strength. So we had this initial impulse looking for a pullback to trade, couldn't quite get to the mid, and then we continued this kind of push-pull. The cleanest entry I saw was at the IB low, this first tag right here that got retested, but ultimately ended up working out. This morning, we're opening in sort of the same kind of posture where we have full session VWAP, full session mid, right on top of the overnight point of control. And so the market, although it has three distributions here, it is in balance currently. It has tested down and has rejected. It has formed, as some of you probably recognize here, an inverted head and shoulders with the pivot line right there at the mid, and it's attempting to be responsive. This morning, the expected play as we open is an open that tries to push down, but ultimately we're looking for a gap to settle trade early. So I'm looking for this thing to really immediately push back into the 39.45 area and potentially test that 55 to 60 zone before we decide on what we want to do next. This is the main play for today. There's not much else I can offer here in terms of what's likely and whatnot. We do have this next low down here at 39.14 or so that we may challenge. Notice that the overnight low is 39.14. 39.14, and that's this low here, and we held it. There's a little bit of support in this zone right here, as you can see, and I am expecting the market to recover just a tad back to at least 39.60 this morning. Okay, I'm not going to draw any lines or whatever. I don't think there's any need for that. It's very obvious what the context is. This morning, I'm willing to trade. I'll leave you with this. This morning, I'm willing to trade from both directions. Yes, the trend is down. The flow is down. The one-time framing up on the weekly is done. It's now neutral. The one-time framing on the daily is down. So the trend is down on the daily. The trend in the weekly is neutral. And to me, it's likely to be a two-sided trade this morning to retest what we did yesterday in the range. So we did have a pretty decent excess in the overnight session down into the next key low again, which was 14. And we've moved back into balance. So I am expecting it to kind of continue to flow in that direction towards 60 before the next decision is made, before the next play is made. The key areas for me right up here, 39.90, 39.60 above, 39.14. So let's put those up. 90, 60, 14, 14 down below right here, which we tagged. And then from there, it gets down into the double O, and then 38.70 is the next big number to play with. Okay, brings us into this zone. So that's what we're looking at. Good luck today. Oh, as far as the event contracts, there were no positions. We tried to buy some puts yesterday based on the fact that most of you voted for the ES, NQ, NCL to settle below their prior settlement, which you were right. It's interesting that the votes, when considering will it close above prior settlement, the votes were no and high confidence no, but those add up to like 58%, 56, 58%. I expected a little more conviction given the posture of the market, but we're not going to go and put up money, especially charity money, on positions that are not likely to win. By the time we got into it, most of those contracts were priced at $14 or $15 with a maximum return of $20. So the risk reward was very poor. I put in bids at $10 just to see if the market pops up and fills those puts, but it didn't. And so there were no positions based on yesterday's voting. We'll vote again tomorrow and see what we can do. Good luck, and I'll catch you tomorrow morning. Take care.